We believe that if you were to look at global money supply and take out the big four, so that's US, UK, Japan, and Europe, take those four out. The rest of the global monetary supply, we assume that 3% will effectively, that Bitcoin will take over 3% of it. I think that's a very conservative assumption, but that gives you a sense of, and I know when we get to price targets, we don't sound conservative, but 3% is conservative. I think it could be much higher. I think it could be 20%. This is a big idea, and it's unstoppable. There's no throat to choke. I think our confidence went up when we saw what happened when Facebook, at the time it was Facebook, launched Diem, right? And you remember the ruckus that caused, especially in Europe? Well, there was a throat to choke. It was Facebook, and it never happened. There's no throat to choke here, so it's unstoppable.
Cathie Wood, the CEO of ARK Invest, believes that Bitcoin could eventually take over a significant portion of the global money supply, excluding the major economies of the US, UK, Japan, and Europe. Specifically, she estimates that Bitcoin could capture 3% of the global money supply outside these big four economies, which she considers a conservative estimate. She even suggests that this percentage could be as high as 20%. Wood argues that Bitcoin is an unstoppable force in the financial world, because no central entity or throat to choke can be targeted or regulated out of existence. This is in contrast to Facebook, now Meta's attempt to launch its cryptocurrency, Diem, or formerly Libra, which faced significant regulatory pushback and ultimately did not succeed. She points out that when traditional corporations, like Facebook, attempt to enter the cryptocurrency space, they face substantial regulatory hurdles. In contrast, Bitcoin, being decentralized and not controlled by any single entity, cannot be easily shut down or controlled by governments. We will now bring you more clips from the interview, as Cathie Wood explains her insight into Bitcoin. Please take some time to like this video and subscribe to the channel to show your support. Thanks, and enjoy.
In 2015, we wrote our first white paper on Bitcoin with Art Laffer. So Art Laffer is a monetary scholar, and Art read the paper, got through it, and said, "Whoa, this is what I have been waiting for since the US closed the gold window in 1971. This is private money. This is going to be big." And I said, "Okay, how big?" "Yes, the big idea." "How big, Art?" He said, "How big is the US monetary base?" Back then it was 4.5 trillion, now it's 7.5 trillion. So it's a big idea. A lot of people found ARK because of Bitcoin in our early days. And so they were in the retail space, individuals who were just buying for their own accounts. What has changed is we are now talking to the major platforms. So we call them wirehouses, so Morgan Stanley, UBS, Merrill Lynch, Wells Fargo. And they are in deep due diligence, like, okay, what is this? We have to have a point of view now. They actually have an index against which they're going to be judged, and that's an ETF, right? Now Bitcoin is part of how they're going to be graded. And while no major platform has yet put any of the spot Bitcoin ETFs on its platform yet, we think that's coming. We can tell from the kinds of questions they're asking. They're asking deep questions, not only about Bitcoin itself, but about infrastructure, ops, risks, and so the heat is on because this is a new asset class. Bitcoin is a new asset class. It's a monetary system to be sure, but it also represents a new asset class. And what that means in our world is that as a fiduciary, someone looking after portfolios for people, a fiduciary has to consider a new asset class because of the low correlation with other assets in terms of returns and risk. And so if you add Bitcoin to an existing portfolio, if that is right, and this is low correlation asset, what that means is over time, returns per unit of risk will go up. So if one platform has Bitcoin and offers that opportunity of diversification and higher risk-adjusted returns, and another doesn't, then they're going to have a problem if this one's right. ETFs are a wonderful structure. They can scale. You've got an ecosystem. This is not just the 10 companies or how many are still in operation. I don't know if any, I don't think any has outright failed yet, but the ecosystem, the structure is extremely flexible because the authorized participants, the market makers, are not inside one firm. We have dozens of authorized participants, and those are the big brokerage houses. So this is another reason they're being not forced into this, they're being lured into this, because the ecosystem, authorized participants, market makers, is a very lucrative ecosystem. And these wirehouses host many of them. So I think, we could scale to hundreds of billions of dollars. Art Laffer and I were just in El Salvador together. So, and I've watched Art's evolution. He's 83 years old. He has served, I think, almost every president, but after his experience with President Nixon, he has never been paid by any of these presidents, and I'm saying on both sides of the aisle. And he is more excited about Bitcoin, and I've known him since 1976. He was my professor at University of Southern California, USC. I have not seen him more excited about anything. He's 83 years old right now, more excited about anything since Proposition 13 in California, which was property tax reform. But he's more excited about this because it has ramifications for the world.
Cathie Wood elaborates on several key points about Bitcoin's significance and future. She recounts a 2015 conversation with monetary scholar Art Laffer, who viewed Bitcoin as a groundbreaking form of private money comparable to the US abandoning the gold standard. Wood highlights the shift from retail to institutional interest, with major financial firms like Morgan Stanley and UBS conducting deep due diligence on Bitcoin. This indicates Bitcoin's emergence as a new asset class, valued for its low correlation with traditional assets, enhancing portfolio diversification, and improving risk-adjusted returns. Wood also praises the scalability and flexibility of Bitcoin ETFs, supported by a robust ecosystem of authorized participants and market makers. She emphasizes the potential for financial institutions to adopt Bitcoin ETFs, driven by competitive pressures. Now, here are more clips of Cathie Wood.
Well, and I can speak to this as a portfolio manager in the equity space as well. I think he thinks, and I could not agree more, that the fact that the Fed, the various Fed members, can get up every day and whip around all financial markets with a few words, or the nuances around a few words, is ridiculous, ridiculous. And he, right, it's just ridiculous. And the volatility that this is creating in the markets, that they are creating, and the boom busts that the Fed is creating, they blame everyone else, but it stems from errant monetary policy. So this idea of getting back to private money is very exciting. Now, I needed to be educated on this a bit because I've studied economic history, and if you look at pre-1913, when the Fed was first came into existence, prior to that, what you see are booms and busts, regular booms and busts. You see on average price stability, but booms and busts in the economy. And so in speaking with Art about that, he said, Well, that's right. But the adjustments that happened to various changes in the economy or in technologies or whatever, they were almost immediate. What we have seen with the Fed is it has enabled bad behavior. Think 0% interest rates for as long as we have. Think about all of the real estate speculation that took place. So now we have a mess in office space, and I think the mess is brewing even more importantly in the multifamily space. And we don't know what other accidents are going to happen out there because of so many years at 0%, and then the leverage taking and the reach for yield. So I think, honestly, the Fed's time has come to go.
Given her analysis, how will Bitcoin evolve in the next decade? Will institutional adoption accelerate its integration into mainstream portfolios? Share your thoughts in the comments section. If you found today's video informative and would like more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, exploring, and, most importantly, investing wisely. Thank you for watching, and we look forward to seeing you in the next video.